Dear valued clients and investors, I would like to take this opportunity to briefly reflect on 2020 as a very unique and challenging year, to look at what lessons we've learned and what the current economic and market developments might hold for us in 2021. When we started out in January, there was a general feeling of much anticipation and expectations about what 2020 could hold for us from a business, personal and wealth creation perspective. Whatever expectations we had changed rapidly as the reality of the COVID pandemic, which had its origins far away from South Africa, started to come closer to home in the months of February and March. It ultimately hit home when the level 5 national lockdown was announced by the President in late March, when our economy was effectively shut down and our freedom of movement was abruptly taken away from us. South Africa went into a very stringent lockdown in order to avoid a potential humanitarian crisis, given our unique demographic and social challenges. This came at a time when our economy has already been in recession with 3 consecutive quarters of declining economic activity. A level 5 lockdown was something that our economy could ill afford, and which led to our economy recording a 4th consecutive quarter of decline at the end of June. Concerns about what the potential impact of the COVID pandemic could mean for the global economy and company earnings started rippling through investment markets. Panic set in towards the end of February and global equity markets experienced its most rapid and deepest sell-off in decades. The global and South African market lost a third of its value in just 3 weeks and reached the bottom on around 23 March. In the local markets, there were no place to hide for asset managers or investors as the equity market, listed property market and bond markets sold off while the rand lost 38% of its value from where it was on 1 January to the weakest level of 19.30 Rand to the dollar. Most of the world entered a recession during the second and third quarters of 2020, and governments and central banks around the world responded aggressively through fiscal stimulus measures like buying bonds and also by cutting interest rates. While the world is still waiting for a vaccine, the aggressive fiscal and monetary response seemed to provide a cure for investment markets, with both the global and local equity markets having recovered to levels in February this year. The recovery in equity markets were largely driven by technology stocks in the global context and mining and resource companies in South Africa, which leaves large parts of these markets with company share prices at very low but not necessarily attractive levels as earnings remain under pressure. The impact of COVID on investment markets can be described as a black swan event which could not have been predicted and of which the impact on markets were unknown. In addition to the COVID black swan, we also had to deal with the US elections, socio-political tensions between the US and China, renewed concerns about Brexit, and more recently at home, another round of credit rating downgrades. There is a saying that one must never waste a good crisis, and best we could do is to reflect on the lessons as advisors, investors, and retirement fund members. The first lesson for me was that events such as COVID can have a significant impact on markets and investment values in the short term, but that as long-term investors, it will show up as a small blip on the investment charts in 10 or 15 years' time from now. The second lesson is that one needs to keep your eyes on the horizon when the ship is rocking from side to side, as that is where our investment destination lies. Allowing our emotions to influence our decision-making in the short term could result in the locking in of permanent losses and missing out on a recovery in investment markets. Having a well thought through and robust investment strategy protects investment values and lessens the risk of panic and irrational decision making in the short term on investments that are made for the long term. Another key reminder was that one has only lost money if you have sold your assets at a lower value than what you have bought them for. A temporary decline in value during a market sell-off is just that, and if you stay invested in the markets, they will recover and get you back on track to achieve your financial goals and objectives. Last but not least, the value of an advisor is critical, as advisors are independent and objective partners and sounding boards that helps investors to keep perspective, remain focused and calm, and assist them in achieving their long-term goals. It was really wonderful to see how mature our investment clients reacted to the COVID pandemic and market crisis, and we believe it speaks to trust in our relationship with you, about our well-educated and informed clients, and the sound investment strategies that are in place for our clients. So where to from here, and what could 2021 possibly hold for us as investors? There are still much uncertainty for the global economic outlook, as the second wave of the global pandemic is spreading across the US and most of Europe, and as new lockdown measures are being implemented. While looking more promising every day, the date of the arrival of a vaccine is not yet clear, and then the logistics related to making the vaccine available needs to be considered. At home, we have various political, fiscal, economic and social challenges to deal with, but slow progress is being made around corruption, infrastructure development and strengthening institutions like SARS, the NPA and Eskom. As we move into 2021, the COVID pandemic will still be with us, but with the benefit of hindsight, we will know that we have weathered the storm and will be wiser and more prepared for future storms given the lessons we have learned. We will continue to further enhance our sound investment philosophy, which is based on dynamic portfolio diversification, an understanding of how time, risk and return enables one to deliver long-term results, and appreciating the cash flow needs of investors and retirement fund members. As institutional and wealth advisors, we commit to continue assisting you in making the most informed investment decisions by staying true to our philosophy and ongoing engagement and communication with you in the most effective way possible. We want to recognize and share our deepest sympathy and condolences for any personal loss you may have experienced during the past year. Finally, we want to thank you for your continued support during a very challenging but interesting 2020, and we look forward to serving your best interest in 2021 and building an even stronger relationship with you. Have a wonderful festive season, travel safe, rest well, and all the very best for 2021.